going on, everyone? It's your boy, the coach, Nathan, here with Win with Nathan. Guys, on this video, I'm going to keep this one more to some factual things that I hear out on a lot of videos, right? So this video, I'm going to break down the true cost of DSCR loans versus said agency loans, right? And the reason I use the word agency is because I'm not going to get in an argument with people. If you listen to the definition of the CFPB basically just states that any mortgage that's not a government-funded loan, VA, USDA, FHA, they're considered conventional. So that means that there's DSCR, there's bank statements, there's alt doc, there's full doc, there's agency loans. All those are conventional loans, right? A lot of people just think conventional is only Fannie and Freddie. By the CFPB definition, it's not. So on this video, let's compare within conventional, let's compare DSCR to said Fannie, because Fannie is one of the biggest routes people go, right? So let's break down the true cost, because many people get this wrong, right? So guys, the biggest myth out there you hear is like, oh my gosh, DSCR loans are like 1.5% higher or 1% higher than conventional Fannie Mae. Are they? I don't think so. So why do you hear that a lot? And the truth of the matter is, when I worked at a previous company, we focused basically on agency loans. We would always coach people to do agency versus anything else. The reason for it is because we made more profit, right? At the end of the day, it was all about the profitability, right? For the company, we made more money because we serviced those loans. We made more money because we had so much overhead with, overrides for management. So if you did a DSCR or non-qualified mortgage conventional loan, the management team didn't make as much. So I believe that's one reason. The second reason is because I believe a lot of people just don't understand it, right? So there's a lot of people out there teaching people DSCR loans and saying it's their niche or it's something they're learning. Guys, this isn't a niche for us. This isn't a niche for our team. This is what we do. This is our bread and butter. Agency loans are very easy. Anyone can do those. DSCR, non-qualified mortgages, it's not a niche, right? We live and breathe them. We love them. So let's break down the facts of the DSCR loan, right? Fact number one, DSCR is always 1.5% higher, 1%, so on. I don't believe so, right? Like I pulled Friday's rates, right? So as of today's date, which is 3/16/2025, we're going off of the rate sheets from Friday and we're going off of what we see in today's market. So I wanted to put a scenario together. So let's look at the scenario. It's a $500,000 purchase, long-term rental at $500,000, right? So let's look at the two. So you got your agency, 20% down on both scenarios. Interest rate, I made this as fair as I can, guys. And so on the agency loan, I did what's called broker paid comp, right? Because a lot of people say it's more expensive to go DSCR because DSCR has origination and Fannie and Freddie don't. Well, that's because a lot of people do what's called lender paid comp, which means they put the pay in the rate. And usually that pay that I see on average is 2.75 in the lender paid comp. So what I did to make this as fair as can be is I went with what's called broker paid comp, which means there's very little margin in the rate and you're paying for it out of pocket, right? That's what I highly recommend you doing with agency loans is negotiate. Now, what I compare to is on most agency loans, the average I see out there for the market is about 2 points. What's called a yield spread, or they do it with a true broker paid comp. That's on average what I see. And I know that's what I would charge if I'm doing your agency loan. Would we charge a little less? Yeah, if you have a offer and we're competing against it, yes. But on average, I see people charge more than 2 points. So we're going to charge 2 points on this scenario. You're looking at an interest rate of 6.99%, right? If you qualify with your debt ratio, closing your personal name and all that stuff, and you escrow. Great loan, right? So if you look at the scenario here, your total cash to close is $122,975, right? Now the DSCR loan, same metric or same figures, right? 500,000, same credit score, tier 1, escrow, all that. On average, we see people charging around 2.5 to 3 points on DSCR, right? I didn't do that because the rate would be lower a lot of times because you're basically buying the rate down. What we charge here at the lender, what I charge most times is 1.5% origination. So because that's standard, I wanted to compare them. Your rate at 20% down for a long-term rental is 7.375. You might be thinking that's a huge gap. It's really not. It's almost 0.375 cost difference. If you look at the monthly payment, it's a monthly saving of $100. But if you look at the cash to close Cash to close is 119,819 because you're paying 0.5% less in origination. Now, could you, if I wanted to make it equal, like dead on, I could have bought the rate down by 0.5%. It would have been 7.25, even closer, right? So if I'm looking at this, the average time people stay in a home is about 7 years. Rentals, it's 5 years before you do a cash out. So if your savings is 104, but your cash savings at time of closing is $3,000. So to take 3,000 divided by 104, I've got to hold on to the property for 28 months before I start seeing a savings. So guys, do I think there's enough savings? And that DSCR is a 3-year prepay, right? And the reason I did 3 years, most investors are doing 3-year prepay, right? Because it doesn't make sense to pay closing costs again. So just looking at it from that standpoint, do I believe DSCR is on average 0.5% to 1.5% higher? Absolutely not. Do I think the cost is that much higher? No, because you're either doing it in the rate with Fannie and Freddie or you're paying broker paid comp. Now, if you negotiate and all that stuff, it could be different, but just looking at the simplicity of this structure, it's really not, right? Now, if we look at the next scenario, here's where a lot of people always talk about the cost of DSCR, right? Is there origination? Yes. Is there origination with Fannie and Freddie? Yes, it's either in the rate or it's broker paid comp. Is the underwriting fee usually $19.95 for DSCR? Yes. Is the underwriting fee usually cheaper on agency? Absolutely. But you got to look at the overall cost, everything about it, right? Now, in that example, we didn't even talk about the liability protection of closing in an LLC if that's what you want to do, right? Now, we're not going to talk about whether or not reports on your credit because we cannot discuss credit. However, Fannie and Freddie, as of today's date, do have guidelines that state if you close in an LLC, you can't omit that off of your debt ratio for future underwriting. That is if you go the DSCR route or a non-qualified mortgage where you can close on the promissory note in an LLC. Fannie and Freddie do not offer that solution. You have to close in your personal name. So not an attorney, not an accountant. I'm not telling you all the benefits of closing in an LLC, but I'm telling you from a simple standpoint from Fannie and Freddie, there's more benefits to a DSCR, and that close of a rate, why not do that? Next scenario I want to look at is let's look at the benefits of DSCR, right? So same cost, same scenario, but here's the thing. Let's say you're working with the right agent and you're negotiating, right? In today's market, you need to have seller concessions. I highly believe seller concessions is the best thing. When you look at agency with the same deal, your max seller concession as of today's dates is 2% seller concessions on investment properties. That's 2%. You can't even buy your rate down because 2% doesn't even cover all your closing costs, right? So with the agency loan, you're at the same rate, 6.99%. Your cash to close is 114,975. That's because you're capped at that. Now, can you negotiate maybe a smaller little price and concessions? Yes, if you have a good agent, but most times I think it's a mental thing with sellers that they want one or the other. They either want a discounted price or they want seller concessions. But a good agent, and I know several of these out there, will negotiate both. So let's look at the same scenario on DSCR loan. A DSCR loan, you can get up to 6% on existing homes, 9% on new construction seller concessions, right? That's huge. So in the same scenario, let's say you negotiate 4% seller concessions, right? Your cash to close is 103,819. That means you have more savings, right? You're coming into the pocket with almost only 20% down, only your your down payment, not your cash to close, but your down payment. So 20% down is 100 grand, right? You're coming in at 103,819. You're saving more money out of pocket than going agency. And on this exact same scenario, right, the 104 saving, and your savings is, let's see, 11,000, actually probably just a little, divide by the 104 savings. You got to hold on to this for over 100 months to start making up for what you are saving by going with agency. Again, not even talking about the other benefits. Now, let's say you have a great agent who maxes out seller concessions, and I work with a lot of these, right? The exact same example, you're a rate shopper, right? A lot of people care about rate more than anything else, but let's say you get 6% seller concession with DSCR. You buy the DSCR rate down to 6.75, right? You pay 3 points to buy your rate down. Plus, you get 6% seller concession. Your rate is lower than agency, and your cash to close is lower than agency because your total cash to close is 107,819. You're buying the rate down. You still have the 3-year prepay, 6.75. It's lower than agency. It's going to save you monthly more than agency, but it's also going to save you cash to close more than agency. You might be thinking, Nathan, why would you suggest that no one's going to take 6%? Guys, I'm telling you right now, almost every deal I have has more than 2% seller concession. It's very rare that on an investment property that I don't see, more than 2%. And one of the reasons behind it, I think, is the logic that most seller agents and sellers just don't believe it's going to happen. The amount of times I get phone calls where sellers are like, I didn't agree to this, right? Or seller agents are like, how are you using all 6%? Because in the contract you said up to 6%. This is an investment loan. It's conventional. You can only get up to 2. No, sir. On the contract it says up to 6. I'm going to use all 6 of it, whether it's prepay HOA, buy the rate down, buy the prepayment penalty out, all those things. Guys, if you work with the right buyer's agent, a lot of times the sellers just don't know. Right? And, recently I had a seller agent call me and tell me they didn't want to sign at the table because they didn't realize we'd use all 6%. Well, you signed a contract. And the bulldog in me came out, and it was very interesting because the buyer's agent was on the call, and I tore into them like, guys, this is not an issue. You guys signed this. It's not your fault that you guys didn't think we could, they thought we couldn't use it. That's your fault, right? You agreed to this in a contract. So guys, if you have the right buyer's agent, they can negotiate very well. If you have the right seller's agent, they will protect you and be able to offer you concessions to try to get better deals, right? So when you look at the cost of things, you have to weigh out the cost versus the benefit. On average, is DSCR a little more expensive? Yes, slightly. Now, where people get this confused a lot is they say there's a cost because of the prepayment penalty. 100% correct. The prepayment penalty is a cost if you use it. If you don't use the prepayment penalty, let's say you hold it for 3 years, there's no cost to you, right? Now, could you buy it out and buy it down? Yes. Now, if you're in a state like Ohio, I think it's New Mexico and some other states where they don't allow prepayment penalties, absolutely. It is more expensive, right? You have to buy down the prepayment penalty. At that point, the rate is slightly higher. Is it going to be 1% higher or 1.5% higher than agency? Probably not. Right? The other thing that people don't understand with the cost is you have to look at the true cost all the way around. If you're buying real estate investments, right, you're going to close in your personal name. Then you're going to turn around and quitclaim deed to an LLC. How much money is that going to cost to have them redo that? That's an extra fee on agency because you can't close in an LLC, right? And then you got to look at your cash to close, right? Don't just look at the rate. Look at your cash to close. Look at the benefits. Look at the up to 9% seller concession. Look at the benefits of closing in an LLC, right? We don't charge extra for an LLC. Now, here's the other thing, right? This is going to be very different than anyone else tells you out there. And this is based upon the guidelines today and what they have been for the last 2 years. Agency loans on investment and primaries, they like reserves. They want reserves. They require reserves. On DSCR loans, do they require reserves? No. Right? We do not require reserves on DSCR loans. Now, if your credit is not if it's rocky, we're going to require reserves. But there's a matrix, just like every other loan out there, that if you have, I think it's above 700 credit, maybe 680, and you're going a DSCR loan, a regular DSCR loan, we don't require reserves on a purchase. Now, if it's over, I think it's over $1 million, we will require reserves. But if it's between $100,000 and $1 million loan, we don't require reserves. Now, if you go with what's called a DSCR Plus, which is for experienced investors, it gives you a discounted rate. We do require 3 months reserves on that because we're going skinny, right, on the margin with the rate. So we do require reserves. It's for the better quality investor. But a regular DSCR loan, we do not require reserves. So where Fannie and Freddie require reserves, we technically don't on DSCR. Here's another cost that people don't think about with Fannie and Freddie. Fannie and Freddie, you got to spend the time, right? Time is money. Getting your documentation, your tax returns, your W-2s, your pay stubs, all that stuff. DSCR is very simple, right? We just want your credit pulled, bank statements, your LLC docs, all that stuff. So it's less time consuming than agency. So if you look at it from a standpoint of time is money, money is time, it's cheaper going DSCR, right? So there's a lot of costs that go with DSCR, but there's a lot of costs that go with Fannie and Freddie. There's a lot of people that get fooled out there because they do lender paid comp, and they might say, hey, I pay zero origination on this agency loan. Okay. But if you paid origination on DSCR, your interest rates are exactly the same. Maybe even DSCR is slightly better, right? So you have to price it correctly. And this is my advice to all you out there. Give me the rate without any credit or yield spread. Let's negotiate your comp and go from there, right? Like retail does. So, and banks do and all that stuff. So guys, the true cost of DSCR loan is not much more. People think, oh, the appraisals are more expensive. They're not. It's the exact same thing as a 1007 and 1004 appraisal with Fannie Mae. So it's not much more. Now, where you might see costs added on DSCR is something that agency can't even compete with, right? It's going to be called short-term rental income. So if you're buying a short-term rental and using short-term rental income, there is a hit, which is called a loan level pricing to DSCR. It's usually about 75 bips, where Fannie and Freddie do not allow you to use short-term rental income, so there's no hit for that. So if you need the benefit of short-term rental income to qualify, yes, there's about a 75 bips hit to it, which means it does cost a little more. But again, why would we compare that to agency when agency doesn't even allow you to use short-term rental? So guys, that's the truth about the cost of DSCR and agency loans. Don't get fooled by people out there saying, oh, it's 1.5% more in rate. It absolutely is if you do what's called lender paid for agency and lender paid for DSCR, where usually lender paid, we see brokers getting lender paid, they're getting paid 3 points, right? And then agency 2.75. We do see a bigger spread with that, but there's no one out there that I know of that does lender paid DSCR except one local company, and they don't do DSCR at all because of that, right? They can't sell the benefit of origination, the benefit of the prepay, the benefit of the LLC, and the seller concessions. So guys, if you have any questions about the true cost, or someone out there is telling you wrong information, like we require reserves all the time, or hey, it's 1% higher, guys, give me a call. I'll gladly break this down because we're looking at an example right now. So guys, until next time, have a good one.